Okay, let's look at this chart for audit reports. And this is probably the most important thing you need to remember because this will help you fly through a task-based simulation. We're going to do one later. It'll also help you fly through multiple choice. Most importantly, it helps you to understand the kind of opinion you're going to give, the report modification, and it's fun at parties to entertain your friends. Although if your friends are entertained by that, find a better party. All right, chart for audit reports. So when we look at this, we're looking at the different types of opinions. Now with the chart for audit reports, first of all, we have three different situations, basic situations. We have disagreement, scope limit, and uncertainty. Now, disagreement means you say one thing, I say another, I flat out disagree with you. I know you're wrong. You say potato, I say potato. You say tomato, I say tomato. Let's call the whole thing off. Hey, right? So that's what we're looking at with disagreement. Disagreement, I disagree with you. So, non-financial report, and that means a non-financial reporting framework. So if these statements are presented in some kind of accordance with, but it's non-financial reporting, we talk about the applicable financial reporting framework. Applicable financial reporting framework, GAAP, for example. But if we're doing our statements on some non-applicable financial reporting framework, that means the statements are non-GAAP. They're not in conformity with whatever, let's say GAAP for US. Inconsistency. The numbers should be, and the principles should be consistently applied from year to year to year. If there's a change in principle from one year to the next, then we have to ask ourselves, do we concur, means do you agree, or do you not concur, which means what? Disagree. So they change from FIFO to LIFO. They changed from one method of accounting to another. I go, why did you do that? We wanted to decrease our expense, to increase our income, to make the company look better. I go, whoa, I disagree with you. That's disagreement. Or they say, we did it for this reason. I go, oh, that makes sense. Then I concur. So we'll look at that later. Inadequate disclosure means what? Things are supposed to be adequately disclosed in the financial statements. So let's say in the financial statements, their footnote disclosures are not adequate. Basically, they're omitted disclosures. They're omitted, they're inadequate. Guess what? I have a problem with that. I disagree with you. We've got scope limitation, means there's a restriction on your ability to obtain what? Sufficient, appropriate audit evidence. But if you think back to your audit report, one of the things we mentioned is what? The paragraph that said, we believe that our audit evidence we have obtained is sufficient and appropriate. So in the report we say, hey, yeah, we've obtained sufficient, appropriate audit evidence. That's why we can give an opinion. Well, if you can't, then there's a restriction on your ability to obtain it. That's a scope limit. Now, it could be because I was hired in January to do last year's audit. Obviously, I couldn't look at ending inventory, so I couldn't obtain enough evidence, but it was because I was hired too late. Or the client said, I'm not going to give it to you. I said, hey, I'd like to see your general ledger. Not going to do it. No. I need to get confirmations. Not going to do it. Not going to give you the information. I need to contact your attorney. No, I'm not going to let you. Well, you probably won't want to audit that person. You probably want to withdraw and leave, but that's called a scope limitation, your ability to obtain enough good evidence. Uncertainty means we just don't know. Uncertainty, for example, a contingent liability. Maybe, for example, there is a, and we're going to look at all these later, but let's say, for example, it is a lawsuit that's unresolved. How much am I going to lose? I don't know. How much am I going to lose? I don't know. That's a contingent liability. It's contingent. It's a loss that may occur in the future as a result of an existing condition. The condition exists today. The loss is going to happen tomorrow. How much? I don't know. That's uncertainty. Going concern, doubt. What is a business called? A business that is running as a healthy company called what? A going concern. So a going concern, doubt, means there's a doubt that it's going to be around next year. It doesn't mean you're concerned about it's going, right? Going concern. A going concern is a business. A going concern doubt means I don't know if it's going to be around. So that's a going concern doubt. So maybe they're going to go bankrupt. Maybe they're in a declining industry. Remember Blockbuster Video used to be everywhere. I don't even know if they still exist. I think then what's the other video place where you can get them and they mail them to your house? And the Netflix, right? So Netflix, all of a sudden, they took off. And then Blockbuster goes, maybe we need to do that as well. A little bit late, right? Now you can go to the grocery store and buy rent videos. So they may not be around next year. I don't know. Audit current year. This is not really an uncertainty, but these are different changes where you want to kind of mention it, called an emphasis of a matter. So those are the situations, the conditions. So I'm going to put here emphasis of matter or other matter, because those also fall into this category. All right, now each situation could either be immaterial to the statements taken as a whole, material to the statements taken as a whole, or very material to the statements taken as a whole. So we're going to use immaterial, material, or very material. If you think back, what does material mean? How material, how significant it is. It is significant enough to affect the user's decision. Had it been included or not included, it would affect the user's decision. That's what we're looking at. Another word that's pretty new for this purpose is pervasive. And with pervasive, we're looking at how broad, how it affects everything. So if you look towards the bottom there, it says the word pervasive means that in the auditor's judgment, the effects are not confined to a specific element, account, or item. So pervasive means that the effects of this situation don't just affect one area, but it might affect more than one area. So they're not just confined to one area, or could represent a substantial portion of the statements, or relate to disclosures that are fundamental. So basically it's pretty broad, it's pretty overbearing. So it says the scope of the effect on the statements. So what we're really looking at is what is the scope of the effect on all of the statements. So if it's not pervasive, this is considered material and not pervasive. This is considered very material and pervasive. So as we go through the chart, here are the situations. We could have immaterial, material, not pervasive, material, very material, and pervasive. Those are the situations. Now remember on the very first page of this section, I said there were how many types of opinions? 5, right? We have what? Unmodified, We have a modified, unmodified, unmodified with explanatory or emphasis, modified, adverse, and disclaimer. So a modified except for, modified, adverse, disclaimer. So those are the situations, those are the 5 reports. You'll see all of them represented there on my chart. So let's say we have disagreement, scope limit, uncertainty, emphasis of a matter. All these situations, let's say, but they're immaterial. What do we give? You give an unmodified all the way down. Just a clean, that's your basic 4 sections, which was your what? Intro, or the financial statements, your auditor's, management's responsibility, auditor's responsibility, and opinion. Then we've got, the second type was unmodified with explanatory information, which we'll call either emphasis of a matter or other matter. I'm going to spend a lot of time on this in a few minutes, but short term, emphasis of a matter means you want to emphasize something. It means that it's supposed to be disclosed and reported, and it is, but you want to mention it because you're afraid that the users of the statements won't see it back here in the notes, so I want to put it in the actual audit report itself. That's called emphasis of a matter. Other matter means that it is not required to be reported or disclosed, but we still want to mention it. That would go here. Then we have a modified except for, and this is called a qualified except for, because in this case we're qualifying. So we used to call it unqualified qualified, now we call it unmodified modified, and with the modified there's what we call a qualified except for, and basically it's an except for. It says, in my opinion, except for this material disagreement, everything else is fine. In my opinion, except for this material scope limit, everything else is fine. As we move over, adverse. Now the adverse opinion is the worst opinion. It says, in my opinion, because of this situation, the statements are not in conformity with GAAP. They are not consistent. They are not adequately disclosed. So that is called an adverse. In my opinion, the statements referred to above do not present fairly in conformity with the applicable financial reporting framework. Whoa, like I want to invest my life savings. Disclaimer says, you know what? You wouldn't give me this information. It is so, this is usually for a client-imposed scope limitation. You wouldn't give me this information. We do not express an opinion. So which one's worse? Saying, we don't give an opinion, or we give an opinion and when it's not good. Which one's worse? Thinking that your girlfriend's cheating on you or knowing that she's cheating on you? Huh? Which one's worse? Everyone says, well, I don't know. Well, thinking means, you know what? I don't know. She might be, but she could be at home cooking a nice meal and getting ready to, hi, or you know it because you call your friend and, hey, I'm over here with her. Anyway, the point is, which is worse? This is worse than this. We'll edit that out. No. All right, so that's the difference. So here's another thing. Unmodified, boom, 4 paragraphs. Unmodified with emphasis. Since it's clean, where does this go? These paragraphs go after the opinion. after the opinion. So when you look at your basic report, come back over here. Here's your non-public, non-issue, unmodified. Intro, management's responsibility, auditor's responsibility, which has 3, opinion, and then here's your emphasis of a matter. So a good thing to think about is if it is unmodified, unqualified, clean, and you want to mention it, put it after. Same thing over here for PCOB, unqualified. Intro